point is talk to you about how to calculate depreciation for personal property, okay? And so personal property, you do not have a lot of options from a tax perspective. And remember, when we're talking about depreciation in this class, we are talking about tax depreciation, and this is not the same necessarily as financial accounting depreciation. All right, in financial accounting, you can use whatever system of depreciation you want as long as it's systematic and rational. The tax code does not allow for those types of options. The tax code allows for makers, okay? And how do we determine our makers depreciation? Well, there are a bunch of charts related to that. And what I'm going to hopefully show you is how to use those charts. And that will help you with figuring out tax depreciation. All right, so here we go. Let's start talking about some of these charts. Now, these are obviously, all of these charts obviously are in your PowerPoint, but I'm also going to post a makers, and I think I've already posted it, a makers file in the file section of Canvas that will have all of these charts in a separate document aside from the PowerPoint. All right, so what this chart is right here is it's an excerpt from a revenue procedure. And what a revenue procedure is a Treasury Department guidance, essentially, that discusses how we depreciate things, all right? And we've already discussed that in order to depreciate something, what do you need to know? Well, you need to know its basis, you need to know the depreciation method, and you need to know its recovery period, okay? And so this is a good general view of recovery period. Now, these are just some of the most common assets that you might have. Note, fishing boat is not listed in this little snapshot. So you're going to have to go out and find fishing boat, but that's not terrible. And make sure when you're looking at fishing boats, we're not talking about it's not a commercial fishing boat. You know, this is not the Deadliest Catch. So if you have questions, feel free to contact me or we can talk on Zoom as well. All right, but let's look at this chart. Okay, so you've got specific depreciable assets here, all right? This class life, all right? Each asset has an asset class, and under certain conventions, you can depreciate a class of assets together, all right? We are not particularly concerned with this column at this time, all right? This alternate recovery period, you may have heard of acres. That's the predecessor to makers. If you have assets that have been in your possession for a number of years, you may have holdover from acres. We are not concerned about that column for our purposes either. What we are concerned about is this column right here, okay? This general recovery period. This is what we want, all right? So you see office furniture, fixtures, equipment. These things have a 7-year recovery period. Computers, peripheral equipment. Peripheral equipment means things like printers, fax machines, those types of things have a 5-year life. General light purpose trucks, okay? And there's a weight limit. Heavy trucks, 18-wheelers, those things have different recovery periods. That's a 5-year recovery period for those. And then manufacturing tools have a 7-year recovery period, okay? So again, this chart is in your PowerPoint, but it's also going to be in a maker's file, all right? So there are also smaller portions of that same revenue procedure in that maker's table, and this again is the column that we're concerned about. Okay. All right, now when we're talking about personal property, you have two conventions, okay? The half-year convention is most common. You also have what's called the mid-quarter convention, okay? Let's talk a little bit about each of these. So let's talk about half year first, okay? What does the half year convention say? Well, the half year convention says you get to recognize 1/2 of a full year's depreciation in the year placed in service and the year sold. All right. So all of the other years in between, you get to recognize a full year of depreciation, but you get to recognize half a year of depreciation in the year you acquire that thing and in the year you sell that thing. The cool thing is your charts calculate that half year for you in year one. Okay, so that's pretty cool. And for the tax return project, you need to select the correct convention, but you don't have to worry about manipulating that half year. I'll show you an example as we roll through, and that should help. Okay. Now, let's talk about the mid-quarter convention because it's still relevant, but it's not as important as it used to be. All right, so the mid-quarter convention is less relevant post Tax Cuts and Jobs Act, okay? And mid-quarter only applies when more than 40% of personal property, is placed in service the last quarter of the year. So if you buy and place in service more than 40% of personal property for that year in the last quarter, so October, November, December, then you have to use the mid-quarter convention. All right? All right, so what do we have? For each convention, you're going to have different tables to help you figure out your percentage of depreciation, okay? So you're going to enter the table at whatever column relates to your recovery period, okay? And then in whatever year of service you're in, that's the percentage you're going to apply to your basis, okay? And there are multiple charts. Now, pay attention to the heading. So you can see that this is half year. All right? This is mid-quarter. Okay? So pay attention to whether you're dealing with mid-quarter convention or half-year convention and which chart you have to use. All right? Half the battle with tax depreciation is getting into the right chart. All right? This is for year of disposition for mid-quarter. Okay, so this does not relate to your tax return project. But we will do practice problems. Oops. That use this. So you'll learn how to do this. You don't have to worry about it for your tax return project. Okay, and I want to get you rolling right now on your tax return projects. Okay, so now let's do an example. So this example is in your PowerPoint, all right? And I've included the charts that you need, so I'll resize things as we're talking about things, all right? So what do we have? Okay, so in 2019, this company purchased and placed in service the following assets. So a die cut machine, which is manufacturing equipment, and a computer, okay? And placed one in service in the first quarter and one in service in the fourth quarter. So the first question is, what is the recovery period for each of the assets? All right, so in order to figure out the recovery period, we need to come over here. And remember, we're going to look at this middle column, all right? And what do we have? Manufacture of metal products. So this die cut machine is 7 years, all right? And then we come over to that same chart and look for computers. So we see that information systems includes computers and their peripheral. General recovery period is 5 years. So we know that this computer is 5-year property. Now, what convention should they use to determine depreciation? So when we talk about what convention, we're talking about half year or mid-quarter, okay? And so the test is if they've placed in service more than 40% of their assets by cost, then they have to use mid-quarter, all right? So what do we need to look at? So, okay, what was placed in service? So it's, the formula is assets placed in service fourth quarter divided by total. And again, we're talking about personal property. Oops, wrong pen. Total personal property placed in service that year. All right, so I'm going to resize this and do the math on that. All right, so what do we have? Well, we know that they placed that computer in service in the fourth quarter, and total assets placed in service is the 3,500 plus the 1,200. All right, so that's 1,200 over 4,700, and what do we get? That gives us 25.53%, which is less than 40. So what convention do we use? We use the half-year convention, which is more common, okay? So the half-year convention is much more commonly used than the mid-quarter convention. All right, so now let's calculate. All right, so now we get to apply kind of what we just looked at and figure out their depreciation. All right, so now that we're on a new slide, we have to remember our recovery periods, and the computer is, whoops, I need a pen. The computer is 5 years, and the die cut machine was 7 years. Okay, and so what I've done, and we already said that we're going to use half year in this situation. So now we need to figure out the depreciation for each one. So we've got the machine and we've got the computer. Okay, so the way we figure out depreciation is our starting point is the cost. And then we're going to multiply that by the percent that we see in the year. So hold on, let's all right, so let's do 2019 depreciation is the cost. All right, and now I've inserted a portion of our half-year convention table down here. And so we have to enter this table at our recovery period. All right, and so we're talking about the machine. And so the machine is a 7-year recovery period. And 2019 is year 1. All right, so we're looking at 14.29%. Okay, so our depreciation that we get to recognize in 2019 is $500.15. Okay, so just for the sake of example, let's figure out what our 2020 depreciation would be. Now, the cool thing about tax depreciation is you always start with what your cost or what your initial basis was, or if you have a basis change in the middle, then you have to go with a different basis. But for the most part, you're going to always use that historical cost or your original basis as your base, if you will, for depreciation. All right, so now we have to go back over to our chart and look at our percents. Okay, so again, we're still talking about the machine, and so it's 7-year property, but now 2020 is year 2, and so our percentage is 24.49%. And so the depreciation that we get to recognize in 2020 is $857.15. Now, you may be looking at this and wondering, okay, well, holy cow, why do we get to recognize so much more depreciation in 2020 than we get to recognize in 2019? Well, remember, this is yet the half-year convention, and what the half-year convention says is in the year of acquisition, 2019, you get a half of a full year of depreciation. So your depreciation in year 1 is going to be significantly less than depreciation in year 2. And you can look at your percents and see, how the convention works. Okay, so now let's do the computer. And so we'll do 2019 first. And our cost of the computer was $1,200. And so now we got to go over and find our percents. And remember, a computer is 5-year property. And year 1 is 20%. Oops. So that gives us $240 for year 1. And then if we move to 2020, still $1,200 for our depreciable base. And now we go over to 5-year property and look at year 2, and our percent is 32%. And then our year 2 depreciation is $384. Okay, and that is how you apply the half-year convention. All right, on to the next slide. All right, so now we've changed our situation just a little bit, okay? We've got the same facts, so we have the same recovery periods. Those have already been given to us, but now we've changed our dates placed in service, okay? We still have the same $4,700 of equipment, but now if you'll notice, the die cut machine was placed in service in the 4th quarter, and the computer was placed in service in the 1st quarter. So we have to test for which convention we're going to use. So remember, 4th quarter assets over total. And so in this situation, that's 3,500 over 4,700, which is going to give us a pretty large percent. So that's 74.46%. That is greater than 40%. So what do we have to use? We have to use the mid-quarter convention. Okay, so we're going to use the mid-quarter convention. And what does the mid-quarter convention assume? The mid-quarter convention assumes that for whatever quarter you place it in service, you get half of that quarter along with the rest of your depreciation. Okay, so let's take a look at our 2 assets. So let's do the computer first. Whoops. And we'll do 2019. And you start out the same way. You have to use your cost. All right, and now I've inserted the mid-quarter convention table, a piece of it in here, okay? And so now you have 2 things that you have to look at. You have to look at its recovery period, all right? And you have to look at the quarter that it was placed in service. So our computer was placed in service in February, all right, which is 1st quarter, and it's got a recovery period of 5 years. So the computer, we enter right here at this very first column. And so our year 1 percentage is 35%. And so our year 1 depreciation is $420. So now let's do 2020. And we start out the same way, but now we have to find our percent, all right? And it's still 5-year property, and it was still placed in service in the 1st quarter. So now we just go down and look at the next row, and that percentage is 26%. And so for the machine, for year 1, we get $124.95. And so now we can do year 2 for our machine. And so year 2 is 2020. Still the same initial cost. Now we got to find our percent for year 2. Our percent for year 2, as we can see, is much larger, 27.55, and that makes sense because it's in service for all of year 2. So 27.55%, and we have $964.25 of depreciation for the machine. So in this segment of Chapter 10, we've covered personal property. We've covered the half-year convention and the mid-quarter convention, all right? The convention that y'all should be most interested in for your tax return project is the half-year convention. Okay, so hopefully this helps, and we will do another section of Chapter 10 in a separate video. Bye.